Let's come back. Previously, we have talked about how to describe the risk of investment loss. We are borrowing a concept from statistics, which is the LPSD. The risk of investment loss is actually the risk we have negative return in investment. And also, usually we will use periodic measures as well. In order to further understand the concept, in topic 23rd, we will compare the risk of investment loss between the stock markets in Japan versus in Korea. This is the question in this topic. What are the differences between Japan and Korea in terms of the risk of investment loss in stock market? Well, this is the picture. The picture is quite clear, right? Now let's look at this picture. Its period is actually from the second half of the year 2020 and until the first half of 2021, this 1 year, right? And our measurement here is the expanded return LPSD. So it's actually the risk of investment loss or negative return. Yep. And this one represents for Korea using KOSPI. This one stands for Japan using Nikkei 225. We find that both are rising, right? Second point. From the perspective of the big trend, they are similar to each other. Sometimes, not always. Third, initially the spread is getting bigger, and then relatively steady, and recently lower, smaller, right? So these are the 3 points when we compare the risk of investment loss between two countries or between two security markets. This is the case script. Still using this command. Okay, the whole module 2, we are almost using the same one single Python command compare security, right? And this is the market indexes we are comparing. This is Nikkei 225 and this is Kospi. Okay, this is the expanded return LPSD. Expanded return LPSD. Yeah. And this is the periods we expect to compare. Of course, for your own practice, you can update this to this year. And then by this case, I believe you can have a further understanding about the differences between the stock markets in Japan and Korea. Update. And as we have learned the concept of risk of market investment loss, well, let's compare stock market versus bond market. Well, even before we do this case studies, we can imagine the results. Okay. In terms of investment loss, we believe that stock market will be much higher, right? Not only higher, would be much higher. While for bond market, we believe it will be pretty low, right? That is because the feature of difference between stock and bonds. Let's do it together. The question in this topic is, what are the differences of market risk of investment loss between stock and bond markets? So probably after these cases, you may have an idea, should I invest in stock market or bond market? Well, that will be a good question. Sometimes it's better in stock market, especially in bull market, while the other times maybe it's better idea to invest in bond market, especially in treasury bond market. That's why every time when central government issue new treasury bonds, you will see a long queue in bank, because we usually buy treasury bonds from bank branches, either from ICBC or CCB or ABC or BOC, right? Well, the first time I look at this picture is also very impressive, because we know that, okay, this is the dates and this is our measurement expanded return, LPSD, measures the risk of investment loss in the market. And this orange line stands for SSE composite index, while this line stands for SSE corporate bond index. Okay. We can easily find out that stock market, its risk of investment loss is much higher than that of a bond market. I use too much here, right? It's really a situation we can see. So it is really a good idea for conservative investors to do investment in bond market. Well, in bond market, we actually have a couple of different niche market as well. We have the word niche market, even in bond market. So the level 1 in bond market we call the treasury bond market. The level 2 we have the enterprise bond market, as well as the corporate bond markets. So these bonds are issued by SOE companies, and these are not. At level 3, we have the convertible bond market. I must say that the convertible bond market would have higher risk than all these things. At level 4, we may have other bonds, such as municipal bonds, right? Okay, so even in bond market, we have different levels. I believe, from my personal perspective, the treasury bonds market, its return will be most steady, and its risk, for most of the cases, in most of the periods, I believe it is among the lowest. May not be absolutely the lowest, but among the lowest, right? In general, from long run, treasury bonds, its credit is endorsed by central government. So we think our central government will not default. Well, enterprise bond and corporate bonds may default. All these bonds may default, right? But treasury bonds usually will not, because we believe in China's central government. Okay. Some of the central government in the world, from global perspective, they may also default, such as this year, the Sri Lanka government. And many years ago, the Greek government, they default for their treasury bonds. Might be other governments default for their treasury bonds, but in general, it's not the majority. It's the minority, right? Most of the treasury bonds are reliable and trustworthy. Yeah. So this is the case script. The case script for this. This is for corporate bonds, corporate bond index. This is for Shanghai Stock Exchange Composite Index. We are using the measurements for, again, risk of investment loss. And these measurements not only suitable for market analysis, it is also suitable for stock analysis. And I believe also suitable for bond analysis, but I haven't tested yet on that. Okay, now we know that compare security. This Python command is very powerful. You can do lots of things to analyze not only stocks but also market index and bonds, not only for the security products in mainland China, but also in China, Hong Kong, in Japan, Korea, US, Canada, France, Germany, India. Okay. Is that suitable for security products in Vietnam? Well, I'm not sure, but I believe not. Okay, because we have no data source for the information of Vietnam security products yet. Okay. Then, one interesting question is, compared to Shanghai Composite Index, of course, the corporate bond index is in a lower risk. What if we compare to, say, for example, enterprise bond index? Or what is the situation if we compare to treasury bond index? We have no idea on that, because usually we think that the enterprise bond index or enterprise bond issued by SOE should be less risky. Of course, maybe less lower return as well. But this is our subjective mindset, our hypothesis. And in order to prove our hypothesis, we need to do analysis. We can use this command. Let me show you how to do it. If we can use these Python commands in a better way, actually we can write lots of small papers on that, right? Okay. Suppose we update to this year. Yeah. And we compare to this one. Let's do it. Okay, this is corporate bond index compared to treasury bond index. So what do you think? Well, the result is out of expectations, denied our hypothesis, right? Let's look at this one. The orange one stands for T bonds, and this one stands for corporate bond, right? And the risk of loss of trading corporate bonds now is lower than that of treasury bonds. Well, this is, I think, sometimes unbelievable, right? Why? So for the moment, I don't know why. If you are interested in bond trading, I suggest you can do a quick analysis looking for information behind this. It is very strange, right? Very strange. This is corporate bond. This is treasury bond. Why the risk of investment loss of treasury bonds is lower than this one? This is pretty interesting. There might be one reason, just from my personal perspective. So starting from this year, I think our microeconomy, the overall situation in our microeconomy is not very good. It's not very good. Well, in a risky economic environment, investors can to avoid risk, right? And in this environment, what can we do to avoid the microeconomic risk? People will buy bond, right? Especially treasury bond, because we believe in our central governments and we believe in it will not default. That's why in this case, so many investors crowded in the treasury bond markets and will make the price of the treasury bonds overestimated means higher than it should be. The treasury bond price go higher than the in such circumstances, okay, because the price of treasury bond is too high, it's much higher than its market value or its reasonable market price. From this sense, its risk of investment loss may be higher, right? So this is one of the hypotheses from my personal perspective. If you can prove it in more evidence, I believe this would be a very good topic to write a small analytical paper. This is pretty interesting because the result is out of our expectations. It's out of our expectations, right? Or it is very different from our expectations. Okay, this is pretty interesting. Back to our slides. Now, after learning how to analyze the risk of market indexes, we have a lot of exercise cases. Let's look at these cases. This one requests us to analyze the risk of holding losses between SSE and SSE Treasury Bond Index. Okay, we can directly imagine the results. Of course, this one would be much higher, right? Much higher. The next one is compare between SSE Enterprise Bond Index and the SSE Corporate Bond Index. Well, this would be interesting, right? Because first, they both are in bond market. This one is from enterprise bond market, and this one is from corporate bond markets. This one issued by SOE companies, and we believe they have less risk in terms of default, right? Let's look at this one. For corporate bond index, it is 00022.SS, but I forgot the code for enterprise bond index. Hopefully somebody can remember, right? We have ever used the code of that, the code of enterprise bond index before. If someone remember that, you can send to our meeting chat windows or our course WeChat group as well. And then we can compare another two markets in Southeast Asia, which is Singapore stock market and Malaysia stock market. So in Singapore stock market, the market index is called the Straits Times Index. Actually, the name of Straits Times is a name of a newspaper. A newspaper called Straits Times. And this newspaper, there is a very famous column called Financial News. And these columns made a very famous stock market index many years ago. Now, the index made by this newspaper now become the most famous market index in Singapore. Okay, it is called STI, Straits Times Index. And in Malaysia, in the security markets in Malaysia, the most famous market index is called the Kuala Lumpur Index. The Kuala Lumpur, the name is the name of the capital of Malaysia. The name is Kuala Lumpur. So they are usually called KL. Somebody may say, okay, yesterday, did you go to KL? The guy may say, okay, yesterday, yes, I did. I drove from Singapore to KL and spent 3 hours in the highway and returned this morning, for example. And then we have another exercise case comparing the security market in Brazil with Mexico. We know that Brazil is the largest country in South America. And Mexico is the largest country in Middle America. It has a long border with USA. And it is also very famous for drugs. Yeah, this is the case studies, the exercise cases for the topics we have just learned. Then we have our module homework now. And this is the end of module 3. At the end of every module, we will have a module homework. As we have altogether 5 modules, we will have 5 module homeworks. And you can choose 3 out of 5, submit to our TA for performance evaluation. Okay. And the time would be within 1 week after we closed our course. 1 week after we close our course. Okay. Let's look at the module homework this time. You can choose one of the 2. First one, analyze the difference of returns and risk between Shanghai Stock Exchange and India Mumbai Stock Exchange since 2010. Okay. Now you can use all the skills and measures you have learned in Module 2. We have lots of concepts about returns, market index movements, and risks, long-term and short-term. Okay, you can use all of them. Then, after all these analysis, I expect you have a conclusion or several points in your conclusions. And your points, I expect your points are approved by your analysis. Also, before you start to do analysis, you can set up some of the hypotheses as well by your imaginations, by your mindset reasonings. Okay? You can set up a couple of hypotheses. Then you use the skills learned in this module to prove your hypothesis from different perspectives and point by points, right? So this is the first module homework. And then what is the second? Analyze the differences of return analysis between Tokyo Stock Exchange and Korea Seoul Stock Exchange. Okay, this is also very interesting. Also, you can change this to the relationship between Japan and China. That is also okay. This will help us to fully understand the differences between the stock markets in China and Japan, right? Okay. For the homework, you can choose one of them to do. What is the form of our deliverables? Deliverables. Well, homework. Okay. Well, okay. I recommend we using Microsoft Word. Word with our text explanations and our figures together with our case scripts. Well, of course, we hope they are very well formatted. That means you need to copy the pictures in the right way. Don't make too small fonts. Okay? Try to make all the fonts in the unified style. Well, this is the very end of Module 3. Do we have any questions? I believe some of you may have questions on Python commands. Okay. Do we have any questions on Python commands? Or are there any people here who are still not yet setting up the environment for us to run the K script? I mean, Jupyter Notebook. I'm not sure about that. Okay. Now we have a couple of minutes. Personally, I believe I'm interested in understand what is the most recent situation, okay, between Hong Kong and Shanghai Stock Exchange for this year, which is I, and this is 01. This represents Hong Kong Hang Seng Index. This represents SSI Composite Index. So what would be the situation this year in terms of their risk of investment loss in these two markets? This is pretty interesting, right? We can do a quick analysis on that. Since we have a interesting financial instrument called Hugang Tong, if there are significant differences between these two markets for whatever measurements, actually we can do arbitrage trading in these two stock markets. Okay, so this is the situation this year. This is Hang Seng Index, and this is SSE Index. If we look at these two markets from the risk of investment loss, Shanghai side is lower. It's lower, right? Lower. Higher. Okay. Then this side we compare risk. In the meantime, we can compare their investment return. If the Shanghai side is lower in terms of risk and higher in terms of return, what do you think? Let's have a quick analysis on that. This time we use investment return. Okay. Remember, in terms of risk, Shanghai side is lower in this picture. Now let's look at in terms of return. What will be the situation? Let's wait. Wow. In terms of return, well, Hong Kong side is higher. So this follows the general rules between return and risk. Sometimes may not. Not always, but just for a specific period of time. The market may not absolutely or completely follow the rules between risk and return. The rules between risk and return. That means higher return usually comes with higher risk, and lower return, well, may not comes with lower risk. This may not be true. However, lower risk must comes with lower return. Higher risk will comes with higher return. This is not true. Okay, so this describes the four interesting relationship between return and risk. This is pretty interesting, right? What about, okay, this is in terms of risk, yes, but in terms of risk of investment loss, what about the general risk? In terms of general risk, we can have a quick analysis on this. Can we change to here to volatility? This is a general risk, right? Let's find out the differences. We know that from the perspective of risk of investment loss, Shanghai side is lower. What about the general risk? Okay. Well, you still follow the same rules, right? Here is Hang Seng Index. This is SSE. Okay. Even from the perspective of the general risk of investment returns, Shanghai said is lower, still lower. Now we have observed from two perspectives of risk. Two perspectives of risk. Shanghai said both lower. Both lower. And if we look at from the perspective of return, Shanghai said is lower as well. Well, this seems reasonable. It makes sense, right? But sometimes may not be absolutely make sense. That will be our rare opportunity for investment. Okay, actually we can find out from another perspective, investment portfolio. We may be able to find out such investment opportunities. That will be in Module 5. Okay, that's all for today. We have done everything in Module 3. Thank you very much. Have a nice day.